With everything going on in the banking industry right now, I'm going to create a quick video here for you to kind of make a mini audit of your cash that's sitting in your bank accounts right now, and to make sure that it's covered by the FDIC. And if you have money sitting in an account that's over the FDIC limit, there's some things that you can do to kind of make sure that you're covered. You know, we've had 3 banks here kind of go under. It started out with Silicon Valley Bank, then it went to Signature Bank in New York, and now recently it was First Republic Bank. And I know a lot of people are kind of worried. They're asking questions, you know, is money safe? Should I keep it in the bank? I just wanted to create a quick video here to kind of walk through everything. So if you have any questions, leave them in the comments below. If you haven't subscribed, please subscribe to my channel to kind of learn more about finance, tax, industries. Thanks. All right, so as I noted earlier in the intro, you know, there's been 3 banks here recently that, you know, went under, unfortunately. The first being Silicon Valley Bank, next Signature Bank of New York, and third, most recently, First Republic Bank. You know, this kind of dates back to 1933 with the Great Depression. You know, there's this Federal Deposit Insurance Corporation at the FDIC. Essentially what it does is it provides coverage or insurance for your deposits that sit in the bank. What's covered under this insurance is, you know, checking accounts, saving accounts, money market accounts, certificate of deposits, money orders, cashier's checks, and there's a couple others. What's not covered is, you know, stocks, bonds, mutual funds, crypto assets, and this is, you know, people always wonder, you know, if I have my money in a Coinbase account, is it covered if something were to happen? You know, the answer is no. Life insurance policies. So these aren't covered under the FDIC. If you have money at a credit union, there is coverage there very similar to the FDIC, and they have something, what's called a National Credit Union Share Insurance Fund, also known as NCUSIF. So if you have money in a credit union, you're also covered. And the coverage is $250,000 per depositor. Now, moving on to this next slide, and this is where it gets important, and I'm going to show you a website that kind of gets into more detail. But first, what you want to make sure is that your bank is listed under the FDIC coverage. You know, most banks have this kind of the FDIC logo on their website at the very bottom. Even though I would say kind of make sure that your bank has that logo at the bottom, I would go one step further and go to this website, and you can kind of do a search for it. You just want to make sure that it's covered there. Next, you know, suggestion is to open up bank accounts at different banks. Just say you have $250,000 at Bank 1, $250,000 in Bank 2. If Bank 2 were to go under, you're still covered, but you're kind of just allocating, you know, the money that you have. And even if you have money under the $250,000, it's good to have money at different banks. And this is where it gets more important here, is you got to go one step further, and, you know, that $250,000 is per account holder, and it's also based on the type of category within that account. If you're married, right, you can technically be insured up to $1 million, right? So you open a bank account under your name, okay? So that's one account holder. That's $250,000 of coverage there. If your spouse opens up a bank account in their name, they get $250,000 of coverage. Then you open up a joint account, right? So that's a third account amongst the two of you, and that joint account is covered up to $250,000, because a joint account is going to have a different name than your personal account and your spouse's account. So you got $250,000 for you, $250,000 for your spouse, and then $500,000 for the both of you in your third account. That's $1 million worth of coverage right there. So I'm going to stop this presentation and kind of move on to kind of show you this website. It's on the FDIC site that kind of shows you by the different categories under the account holder's name. So just say, even though you have 2 bank accounts under your name, your limit is still $250,000 because it's under your name and it's under the account holder's name. And again, the rules are per bank, per account holder. So that's why it's important that, you know, if you want to have, you know, coverage, that $250,000 coverage, and you yourself, and just say you're single, is to kind of go to another bank and open up a different bank. Or I'm going to show you in this different website here, the FDIC website, where just say you have a revocable trust, right? That's a different bank. That's a different name. Okay. So you have your name, and then you got your revocable trust name. So that's 2 names. Each account has that coverage of the $250. So I'm going to stop here. I'm going to carry on this presentation, kind of show you that website. All right, so here's the last part here. And if you go to the FDIC website and you go to your insured deposits, it's going to give you some more information. And I kind of, highlighted some of this information in the presentation I gave, but, some of the basics, like here's what's not covered, here's what's covered. I think I covered all these, and as well as what's not covered. You can see, stock investments, bond investments, safe deposit boxes in their contents, municipal securities, annuities, life insurance policies, all that. But you can see here the standard deposit insurance amount is per depositor per insured bank for each account category. So like in the example I gave, it's you and your spouse, that's 2 people, right? So that's 2 depositors, and you got 1 insured account, bank account, right? So just say it's Chase Bank for each account category. Right, so you can do, and here are the account categories, and this is very important. You got single accounts, right? Retirement accounts, joint accounts, revocable trust accounts. So each account that you open up under that name, and you can, when you visit this website, I'm not going to go into the details here, but when you visit this website, you can click on it, it will provide you more information. But in my example, in the the video here, you got you. Right, you open up account under your name in Chase, right? And then your spouse opens up one. You're covered up to $250 for the spouse, so that's $500,000. And then you open up a third account, a joint account, right? So that's going to be you and your spouse. That's a different account name, right? So that's up to $500,000 there. So that's $1 million of coverage. So if you got like a revocable trust, irrevocable trust, that's a separate account name, right? That you can open up at Chase. If you have $250, you can put it into there. So there's ways on having more than $250,000 of coverage. That's, the bottom line that I want to kind of get across here. And it provides a lot of kind of like good examples on how to kind of get more coverage, by expanding that $250, right? So then you go to a different bank, right? So bank number, Bank of America, and you do the same there. So you'll be able to get a lot of coverage if you're over that $250,000 and you're kind of just worried. So anyways, just been getting a lot of questions with these 3 banks, and where should you put your money? And if you have money in a bank account, are you insured? And if there's ways to kind of, get more coverage. So here's some examples. So this website here is the FDIC.gov/resources/deposit insurance. So again, if you have any questions, let me know. Leave them in the comments below. Thank you.